Hey everyone, welcome in to another daily editorial here on the KE Report. I'm chatting with Jeff Christian. We're going to be talking precious metals, not just gold and silver, also looking at platinum and palladium. I'm going to ask Jeff about investment demand, central bank buying, and a recap of some of the commitment of trader report, some of the changes we have seen all within the precious metals sphere. Jeff is the managing partner at the CPM Group. I will post a link to the CPM Group website in the show notes. Jeff, let's just start off on, I guess, the gold front. Gold hanging out just above 2,400. It was just below 2,400 as of yesterday. But overall, look, this is still a strong price for gold, and it seems like weakness is continuing to be bought. And gold, for the most part, kind of moving sideways in and around these all-time highs, even after last week when it poked its head close to 2,500 and dropped about $80 on the back of that. It's still holding around 2,400. Jeff, what are you seeing in terms of the investment demand side of things for gold right now?
So a lot of investors have pulled back from gold over the last several weeks. I think there's just a feeling that maybe the price has been too high. And it's interesting because at the beginning of last week, we said, look, if you're a short-term investor, you might want to stand aside because the price was about 24.60. We said this thing could go to 2,500, but it could also go to 2,400 in the next couple of days. And on Wednesday, it hit $2,488 or $89. Then on Friday, it was below 2,400. There's incredible volatility. So you've got a lot of investors saying, hey, it's kind of a high price right now. And I'll get back to that in a second. On Friday then, what we said was, if we thought that this $100 spread in our short-term price expectations was high last week, this week we're saying it could be $200. I wouldn't be surprised to see the price spike back up toward 2,500, but I also wouldn't be surprised to see it spike down to 2,300. There's just this tremendous volatility. And on the downside, I think one of the things to watch out for is some of the changes. We don't want to get into the politics and election year politics in the United States, but I think with the switch from Biden to Harris, that has, and also the appointment of J.D. Vance as Trump's vice presidential candidate, those two things have radically changed the political environment in the U.S. presidential campaign. And that could actually trigger some profit-taking in gold that could take the price down another $100 pretty quickly.
So volatility, you are right. We've seen quite high volatility, especially in the silver market. We've seen silver moving $1 plus a day a couple times a week. We haven't seen that sort of action in years, maybe even decades. Is volatility good for the sector, though? Does it bring in more traders, more interest broadly?
Well, it brings in more traders. I don't know that it brings in more investors. And so when you say what is good, I mean, I tend to identify as an investor. And in fact, when people give us money to manage, we stress we're not traders, we're investors. And we're going to put in positions that might be there for months or years. And you're going to pay us for maintaining that and not doing it. We don't trade for trade's sake. I think that volatility up to a certain point helps because it brings in liquidity with short-term traders. But in the long run, I think it's a negative for prices because there are any number of long-term investors with a lot of money who say, it's just too volatile and uncertain for me. I'm going to stick with stocks and bonds.
What about the demand from the retail audience? We continue to hear that Costco is selling a lot of gold bars. Recently, I got a note from TD that they're also now selling bullion. It seems like bullion is more available and being sold to more of, I guess, the retail audience. Have you noticed this? And what does that play? How does that play into the market?
Yeah, it is. And you can look at other factors like, for example, U.S. Eagle and Buffalo sales are up, I think, about 46% this year compared to last year. I'm sorry, I got to stand corrected. You're seeing that in the silver coins. The bullion, the eagles, the gold eagles and buffaloes are actually off. But you are seeing increased smaller investors. The Costco effect is there, but you're also seeing it across the spectrum. Now, that's like in the first half of this year. You have seen in the last week or two, you've seen a lot of participants, including smaller retail investors, just back away from the gold and silver market and stand aside waiting for some clarity.
Some clarity on what? Is that the political aspect? Is it market aspect? Because in all fairness, markets have done well along with gold. So what clarity are they looking for?
They're looking for clarity on the political environment, not only in the United States, but on a global basis, and what's going on in Europe with the French election and the English elections. And the politics are only important, well, they're not only important, but they're mostly important insofar as they can affect economic conditions. And what's going on in the economy? There's a tremendous inflation. People hear that inflation is moderating, but it's still high. Prices are high. People don't understand the difference between high prices and rapidly rising high prices, which is what inflation is. The fact is that the prices have risen very sharply over the last 4 years, and they're staying high in many cases. People aren't reducing the prices at which they sell their goods and services. So there's a lot of confusion about the state of the economy. And I think that investors, on the one hand, they're riding what's been a good first half, especially April, May, June in gold and silver with rising prices. So they're riding their long positions that have done well for the last 3 months. But there's a great deal of uncertainty and nervousness that have prices gotten to their peak, or are things going to get worse in the economy and drive gold and silver prices higher? Are they going to get better in the economy and drive gold and silver prices lower? So I think there's a lot of nervousness on the part of investors. And as I said, I think in the last week or two, you saw that in not only, well, you saw it in the retail market, you saw it in the wholesale market, you saw it with large investors, you saw it with central banks, you saw it in China, you saw it in India, as well as the United States, Canada, and Europe. It's this universal concern as to where are we going next as a world.
What about central bank demand? It's been a huge catalyst for the gold market, not so much for silver because central banks buy gold, not silver, but silver can follow along with gold moves. But it was that news, I believe in June, when China announced that they had not bought any gold in the month of May. That was a temporary shock to the gold market. But overall, what's some of the updated data in terms of central bank buying of gold?
Yeah, not just only the PBOC, the People's Bank of China. Other central banks pulled back too. And in May and in June, we don't have data for June yet, but through May, central banks, and in May, central banks were actually net sellers in May. And that partly, I think, reflected very large sales by the Central Bank of Russia. But central banks pulled back. Not just, and as I said, it's not just the PBOC. The PBOC did not buy any gold in May. From what we can tell, they have not bought any gold in June or in July. I stand corrected. The Central Bank of Russia sold almost 2 million ounces of gold in May. So you saw net sales by central banks as a group in May. So the price sensitivity of central banks is greater than that of private investors. And you're seeing the central banks say, I'm kind of a buyer at 2,300. I'm a little bit more reluctant at 2,400, at 2,450, 2,500. I'm going to wait and see. So you're seeing central banks just stand aside at this point.
Okay. Well, and maybe that's why we have seen kind of that sideways price move. Let's talk CoT reports then. Commitment of trader reports. Starting off with gold. What have you noticed in terms of any significant changes over the last few weeks or few months?
Well, I think with gold, the biggest thing that I've seen in the CoT commitment of traders is that you've had some significant liquidation of the short gold trades that were there. We look at gross long, gross short, as well as net non-commercials. And the shorts on the non-commercial, the institutional investors, have gone from like 15 million ounces down to about 7 million ounces. So that's a big reduction in the number of investors or the extent to which institutional investors think that the gold price is going to fall. They're betting. They've increased their gross long, not so much, but some. And because of the reduction in the gross shorts, the net position is around 25 million ounces now, net long. So that's institutional investors are saying, we're trading gold from the long side, that in terms of the futures market. And again, the futures market is where you see shorter term investors show up. If you're a longer term investor, chances are you're going to be involved in some other gold market rather than the futures market where you have to roll every 2-3 months.
What about silver? What are we seeing in the silver market then?
It's an interesting contrast to gold in that you have not seen the shorts liquidate positions in silver to any significant or meaningful way. So you still have a lot of institutional investors who are maintaining the view that, hey, silver can go down, and it can go down quickly. You have seen some increase on the gross long, and as a consequence, the net longs have risen, and they're around 250 million ounces. But I think the significant difference between gold and silver right now is that the shorts have not backed away in silver the way they have in gold.
So can we correlate any of these moves in the CoT reports, gold or silver-wise, to what price might do here in the near term?
Absolutely. I think that it's funny because it's maybe counterintuitive, but because the shorts have liquidated their positions in gold but not in silver, if the prices fall, gold is, as you said, it's trading right around 2,400 as we speak. Silver is around 29.30. It has been testing that $29 level. If you saw gold and silver break below in a significant way, you might see gold fall further because there'll be any number of institutional investors who would add to their short positions, while in silver, they already have their short positions. So they would just be writing them. So this may make gold a little bit more vulnerable on the downside. So if you look at our ultra short-term projections, as I said, we wouldn't be surprised to see gold drop all the way to $2,300. But with silver, we're saying, well, if it breaks 29, it might go to 28. So silver has some downside protection, if you will, in that it's already got the shorts there. Whereas gold, you'd probably see people going short if the price broke below 2,400 in a significant way.
Okay, that makes sense. Thanks for breaking that down, Jeff. Let's now circle around to platinum and palladium. I promised everybody that we would chat about that briefly. So what are you seeing in terms of commitment to trader reports and investment demand for platinum and palladium?
Yeah, the commitment to traders reports are interesting for platinum and palladium. Investors are trading both of them pretty much from short position. There's this view, the worm has turned, and fabrication demand and demand in the auto industry continues, but it's weaker and it's lower than it has been. Electric vehicles continue to take market share. In terms of palladium, it's even more bearish than platinum because you're seeing continued substitution away from palladium back to platinum in auto catalysts for cars that still burn petroleum products, gasoline or diesel. So, but you're seeing a lot of investors, the preponderance of investors trading platinum and palladium futures are short. But you have seen an increase, a modest increase in the longs over the last few weeks. And these are institutional investors who basically have been saying, look, I understand the fundamentals are weak in the longer term basis, but these prices have come down so far and they're so low, maybe they're due for a bounce. And we had thought that that was possibly the case a few weeks ago, and we were wrong. The price bounced downward as opposed to upward. But you have seen some small increase in institutions willing to go long platinum and palladium on an ultra short-term basis with the view that prices could bounce higher just because they are so low. But right now, the fundamentals, so that's the commitment of traders. Right now, the fundamental weakness in the PGM markets seems to be overriding the technical factors that cause people to say, the price is so low, I think it might be due for a bounce higher. But the fundamentals continue to be relatively weak for platinum and palladium. The auto industries in many countries are doing better than last year, but not all that great. And the supply is holding up perhaps better than people thought.
So, Jeff, before I get you out of here, are we seeing any seasonality in the way precious metals are trading, whether it's gold, silver, platinum, palladium? We have seen some volatility. We are in summer. It feels like some summer trading, but again, there's been more volatility, especially in silver and even in gold. Prices have broadly moved sideways, though. Any seasonality at play right now?
There is some seasonality in platinum and palladium, which tend to be weaker right now, and then they pick up in September. In gold and silver, I think you're seeing some seasonality, but it's being overridden by event-driven demand. So I think a lot of investors who might have backed away in July and August traditionally, seasonally, are not backing away because they're looking at the state of the world and they're saying, no, I think that if anything, I want to stay long gold and silver. So the seasonality is there. You can see it a little bit in the prices, but it's weaker in its effect on the price than are the events, both exogenous events in politics and economics and fundamental events in terms of supply and demand.
All right, Jeff, we'll wrap it up here. As always, thank you for your time. Always a pleasure chatting with you and getting some insights on what we're seeing on the more investment demand side and all the other factors driving, especially precious metals. Jeff, I hope you have a great rest of your week. We will chat again next